Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to look at one of the advanced manual trades that we look at in MTPredictor, which we call a VSA, or volume spike analysis. This is a very good trade setup because it shows what the professional money is doing. So let me go through this and show you a recent example that unfolded just yesterday on the DAX. This is a 3-minute chart of the DAX. You can see here to start with we had a very nice TS2 sell there as a standard automatic setup, and as you see the market came down to our first target here for a nice 6.8 hour profit. But that's not what I want to look at in this particular trade setup. What I want to do is go back to here. Now what is a VSA setup? Well, if I move forward one bar, and I'm to make these a little bit thicker, can you see the last bar visible here was a wide range bar, but more importantly it had increased volume. This is highlighted by our our red spike here, or our red volume on our volume bars here. So this said there's something unusual in this volume, it's higher than normal, and we had a wide range bar. But also this wide range bar went through a prior pivot low. Can you see here? So psychologically, amateur traders will look at this and say this is an important low here. So a break of a prior important low, if I perhaps put the cursor on, you can see that a bit clearer. So there's the level of the excuse me, the prior low, and as you can see this bar here went through it. So in other words, the market was on a wide range bar, higher volume, breaking new lows. So most amateur traders will look at this and say, this increased volume in this bar is actually selling because it's breaking beyond a prior important pivot, in other words going down. However, that's not always the case. What we have also in MTPredictor, another leading tool which is really good, is our decision point tool. For this we hover over the prior pivot, which is here, we right mouse click on decision point. This gives area of support and resistance. Now these areas of support and resistance are on the chart in advance. It's important to understand these are leading indicators. But as you can see, this then projected an area of support just below this prior low. So let's see what happens. We go forward one bar. Well, next we get a blue buy bar. MTPredictor colours its bars based on whether there's underlying buying or selling, and if we have a blue bar unfolding at support, it's a potential buy. Now what does this mean? If we step forward a bit, you can see the market eventually rallied up like this very nicely. It carried on rallying up quite strongly later. So what does it mean that if the market failed to follow through? In other words, if the market now fails to carry on going down, it means that the selling on the previous bar, which was here, was not selling as you amateur traders may have anticipated, is actually buying by professionals. In other words, the professionals are looking to get long to then move the market higher. So how do we take advantage of this? Well, what we can do is, first and foremost, we know the level at which this reversal is likely to occur. This is our decision point level. So this is important. In other words, we need an area to come in with a small controlled risk. So that's why we have to anticipate the level where this reversal is to occur. We also need to create a trade strategy around this. In other words, we don't want to just buy or sell just willy-nilly. We need to have a trade that actually makes sense. So for this, we go back to the prior pivot, which is here. You can see our pivot lines are placed on the chart automatically. Again, we right mouse click, we place our decision point level on the chart. This is the area where we anticipate that the market is going to move after the anticipated professional buying comes in. So now we can use our risk reward tool. Just one click on the bar of the entry, which would be one tick above this blue buy bar. The stop will be one tick below the low, which again would be this blue buy bar. Our anticipated level the market's going to go to would be this decision point target. And instantly, can you see how we can evaluate a trade? In other words, see if indeed the volume is going to push this market higher. We don't want to just say, the market's going to move higher. We want to know how good a trade or a potential trade could be. In other words, we have to assess what the risk rewarded would be at a potential target. Here the potential profit would be 4.9 R, or 4.9 risk units, or 4.9 times greater than the initial risk. In other words, if this is right, the profit is almost 5 times greater than what we would return if we actually make a losing trade on this. And these are important because they give you a framework to see how good a potential trade is. So let's see what happens. The next bar we then take it into a long trade. If I zoom out a bit and carry on moving up, you can see this is what happens. The market does rally, and it rallies up to the first target very nicely. I'll just take off some space to the right hand side so we can actually see this a little bit better. There we go. So that's what the market did. It rallied from there, it rallied up into that first target, and as such was a very good trade. But can you see how this gave us a good initial setup, because the initial risk was controlled because we had our decision point level at which we're anticipating the reversal to occur. I like these trades. In fact, this is one of my favourite trades along with the MTPredictor Holy Grail trade setup, because the volume in here indicates professionals are starting to enter the market, and normally professionals will move the market quite strongly. So you tend to get good, strong moves off these particular VSA setups. So just to review this again, what we're looking for, so I'll just leave the chart there, what we're looking for is a wide range bar to go beyond a prior pivot to then give us our VSA indication on our volume indicator down there. The reversal then to come in at our decision point level, and it to come in with the blue buy bar. We then set up our target with the decision point from the prior swing high. We then use our risk reward tool to gauge how good that particular trade setup is. There are other software companies that look at volume like this. Volume spread analysis is fairly standard in the industry, but where we gain over those other software programs is we have areas where the reversal is anticipated to reverse. In other words, where the professional buying in this case is going to step in. Then more importantly, where the market is likely to go. Then even more importantly, how good the trade is around that potential move. In other words, you assess the risk reward with that particular trade setup. So hopefully that's been a good example to show our VSA trade setup on the DAX yesterday. And as I said, it's one of my favourite trade setups because the professional buying in this case is coming in, so you tend to get good moves when these setups unfold. And as you can see, that caught that low absolutely perfectly.